Participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nishit Solanki. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and welcome to Neogen Chemicals Q1FY26 earnings conference call for analysts and investors. Today, we are joined by senior members of the management team, including Dr. Harin Kanani, Managing Director, Mr. Anurag Surana, Director, and Mr. Gopi Krishnan Sarathi, Chief Financial Officer. We will commence the call with opening thoughts from the management team, after which we'll open the floor for your questions. Before we begin, a standard disclaimer. Certain statements made or discussed today may be forward-looking. Actual results could vary, and a detailed disclaimer is available in our Q1FY26 earnings presentation, which has been shared and uploaded on stock exchange websites. With that, I'd like to invite Dr. Harin Kanani to share his perspectives. Dr. Kanani, over to you.
Thank you, Nishit. Good morning, everyone. Thank you so much for joining our early morning earnings call for Q1FY26. We are pleased to have you join us today to review our financial performance and update you on our key strategic initiatives. Beginning with our performance for the quarter, we achieved remarkable resilience, successfully maintaining our momentum. Our diversified business model proved its inherent strength, especially as we navigated the challenge of our Dahej plant unavailability throughout the quarter due to the fire incident. Despite those operational hurdles and a prevailing soft pricing environment, our results were bolstered by sustained volume growth in the base business. Additionally, initial commercial sales from Neogen Ionics for both electrolyte and lithium salts
Hello, can you hear me?
Ladies and gentlemen, we have the management line reconnected. Hearing, sir, please, you can go ahead.
Yeah. So, despite the operational hurdles and a prevailing soft pricing environment, our results were bolstered by sustained volume growth in the base business. Additionally, initial commercial sales from Neogen Ionics for both electrolyte and lithium electrolyte salts began contributing meaningfully. Our ability to navigate these complexities underscores the remarkable strength and adaptability of our overall operations. Turning your attention to the key updates during the quarter, our recovery from the Dahej fire incident is progressing swiftly. We have secured initial insurance claim with INR 50.55 crore received in the June 2025 and additional 30 crore received in July 2025. With this, the net claim receivable is INR 268.27 crores on consolidated basis. We expect this to be realized in due course. In addition, there will be some additional amount which we will realize, which is not determined, for reinstatement value difference as well as for the loss on profit. The replacement plant is taking concrete shape at an adjacent location. We have completed the civil foundation work and placed orders for long lead time equipment. The plant remains firmly on track to be operational by next year. In another significant development, our Chairman and Managing Director, Mr. Haridas Kanani, will be retiring from his position effectively September 30, 2025, as he completes 80 years on that date. The entire Neogen family extends its deepest gratitude for his immense contribution since founding the company, his visionary leadership in establishing a strong foundation, and his pivotal role in making Neogen a leader in specialty chemicals while fostering a culture of excellence and innovation. In recognition of his outstanding dedication and invaluable contribution, the board has conferred upon him the honorary title of Chairman Emeritus effective October 1st, 2025, ensuring we continue to benefit from his invaluable guidance and mentorship. Concurrently, the board has designated Mr. Anurag Surana as Chairman and Non-Executive Non-Independent Director effective October 1, 2025. This ensures a seamless transition and strong leadership and guidance for Neogen in the future. Shifting our focus to strategic growth drivers, I will provide updates on expansion initiatives, particularly in battery chemicals segment. Regarding the greenfield facility for electrolyte using MUIS technology in Pakhajan, the HPCPIR, piling work is completed, civil work is significantly finished, and long lead equipments have already been ordered, and we have started receiving the same. A crucial milestone is the ongoing factory acceptance test of the module manufacturing plant at Mitsubishi Engineering Corporation manufacturing workshop site. Of our total 1,500 crore capex, we have deployed INR 506 crore to date, and remaining amount will be deployed shortly in line with the accelerated project schedule. A major development is the incorporation of Neogen Morita New Materials Limited, NML for short. NML is wholly owned subsidiary of Neogen Ionics Limited and a step-down subsidiary of Neogen Chemicals Limited. This venture aims to leverage Morita Chemical Industries, Japan's proven technology for over 30 years of experience to produce lithium salts. These salts will be used captively for our electrolyte production and for global sales, addressing the growing demand. Accelerating our entry into high-growth lithium-ion battery materials, vital for India's EV and energy storage, this project positions Neogen as a scaled domestic manufacturer. We aim to capture significant market share, reduce import dependence, and leverage global technology, diversifying revenue and establishing ourselves as a critical advanced battery supply chain supplier, driving future growth and profitability. Despite adjusting our near-term revenue guidance to reflect current operational realities, our long-term trajectory remains robust. Overall, we are confident in our ability to continue delivering value to our shareholder through strategic execution, innovation, and unwavering commitment to operational excellence. That concludes my opening remarks. I would now request our CFO, Mr. Gopi Krishnan Sathi, to share financial highlights for the period under review.
Thank you, Dr. Harin Kanani. Good morning, everyone. Welcome to Neogen Chemicals Q1 FY26 earning call. Let me walk you through our key highlights, financial highlights. All numbers are on consolidated basis except unless called off specifically. For Q1 FY26, we achieved a revenue of 186.7 crore, higher by 4% despite the non-availability of the H plant for the quarter. As highlighted by Dr. Harin Kanani, the Neogen Ionics contributed rupees 5.4 crore revenue in Q1 FY26, building on its previous year full year revenue of 11.95 crore. Organic revenue for the period stood at 165 crores, reflecting a 16% increase, while inorganic revenue came at 22 crore. EBITDA stood at 31.5 crore, up 2% year-on-year. Despite the headwinds, we maintained a steady EBITDA attributed to favorable product mix and our ongoing cost optimization initiatives, which effectively offset the declining realization. Consequently, our EBITDA margin reached 18.8% on standalone basis and 16.9% on consolidated basis. Our profit after tax largely reflected our operational performance during the quarter, coming at 10.3 crores. Moving to other key developments during the quarter, CRISIL has reaffirmed our credit rating at CRISIL A with an outlook negative for long term and CRISIL A1 for short term, with both removed from the rating watch with developing implication. This reconfirms the confidence in our financial stability and strategic direction. Furthermore, our board has approved raising of rupees 200 crore through private placement of fully paid, secured, listed, rated, redeemable, non-cumulative NCD through one or more tranches. This will provide us additional financial flexibility for our growth initiatives. That concludes my remark. I will now request the moderator to open the forum for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ankur from Axis. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. First question on the salt bit. What's the status on the product approvals here, given that, we were waiting for the exports revenue ramp up there. So just wanted to check.
From our side, we are all ready. We are still waiting for the customer to schedule an audit. There were, with whatever is happening in the US currently, there were some delays from the customer side. They've not yet fixed the date, but again, we remain connected with them, and it should happen, sometime soon. Also, as you are aware, our Dahej capacity ramp up is also happening. So I think in Q2 for around 15 days, we are also going to take a break to connect the existing plant to the increased capacity, which is likely to come by September and October. But from our side, we are ready for the salt. We are just waiting for customer approvals. And in the meantime, whatever small revenue we generate in the salt, we are basically selling it to non-regulated markets. Basically not non-regulated, but in, let's say, China market, where we are actually going against very strong competitors who are already present there. But that's the small revenue currently generating. So from our side, we are ready. Our capacity increase is also coming online because, as you know, the Dahej capacity is going to go up to 2,500 metric ton by March. So ramp up of that and connection to the existing facilities is also going on there.
Yeah, sure. Just a follow-up there. So, from a key end user market perspective, US will be bigger or Europe? And secondly, is there any change in demand or slight softness because of the tariff-led sort of, uncertainty there? And how do you put your... Yeah, go ahead first. I'll ask the question later, yeah.
Yeah, so for your first question, US or Europe, US is the larger market, which is because there's already a lot of established battery manufacturing activities which are already happening in the US. Also, while there is a change in IRA, there is a there were two subsidies available in the US. One IRA was for the EV maker, and there's another subsidy, I think, called as 45X credits, which are basically available to the cell makers. So that is still available to the battery makers, and that is also significant, like between 25 to 35% of the total battery manufacturing cost. And that also has a requirement of localization and China-free supply chain. So what we have seen is the interest is actually even growing stronger because people didn't have a clarity that, post the big, beautiful bill, what changes are going to happen. But those were maintained, and to some extent, even the non-China provision were made stricter. So I think that we have seen interest from the international market actually increase. So the combination of that as well as Neogen forming JV, we have seen more newer companies, who were kind of sitting on a fence, waiting for this clarity to now join, and now one by one they've started visiting Neogen. So before we had one or two potential customers, now we have 4-5 different customers who have started approaching. They are battery makers, electrolyte makers, as well as even EV makers. So all of these guys are now approaching Neogen, and having some visits have already happened, and some more are happening during this quarter.
Sure, that's helpful. And just, the follow-up there. So what is the typical time lag required at your end if you want to, let's say, increase your salt capacity, given there is so much demand and interest coming in?
So Dahej, at present, we will be at 2,500, what we are targeting. And if I have to increase a little bit, I can increase 1,000 metric ton more, and that is mostly be focused on the additives. Because, the lithium additives part, so lithium salt is two parts, the main electrolyte salt as well as the additives. So we are basically keeping right now additive facility increase is all planned at Dahej. And the main electrolyte salt capacity is, as you are aware, is coming out at Pakhajan. So we have kept a room to add 1 KTA in Pakhajan in in our Dahej facility for the additive, and we have kept 2 additional KTA in Pakhajan. So when we complete the capex and we have 5.5 KTA, at least 3 KTA can come in relatively quickly within like 6 to 9 months kind of a period. And then beyond that, we'll have to plan because it will be a new manufacturing block either at our Dahej or our Pakhajan site. So 3 KTA can be added from 5.5 to 8.5, but beyond 8.5, we will have we will have to wait and maybe around 12 months to 15 months if we have to set something up.
Sure, sir. That's very helpful. And just a second pick on the the battery plants coming in India. There are some delays, but if you can highlight the timelines on which all plants are coming and what could be the time frame that we can look at.
So from our view, we are seeing our customer like Ola, they've announced the timeline that by September, October, they want to have commercial operations like ramp up. And then another ramp up, which is expected by next March or April. So we are on track of that. I think we've also heard publicly that Excite is also starting relatively very soon in the second half. I think the announced date was 15th August for some trials to start. So I think they both are on track as we had predicted in 2024. And the remaining customers like Reliance, Tata, Vari and Amar Raja. So they all are targeting what they were publicly announced by 2026. So that timeline remains.
Okay, great, sir. Thanks a lot for all the questions and all the best.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Abhijit Akela from Kotak Institutional Equities. Please go ahead.
Yeah, good morning and thank you so much. Possible to share the volume growth number for the first quarter, please, maybe across the businesses?
I would say on the bromine derivative side, on the organic side, the volume growth would be around 10 to 15%. And on the lithium side, there's been a little bit of a degrowth in this particular quarter. So last quarter we had pushed a little bit, and Q1 is generally softer, but this time it was a little bit more softer than normal. But overall, in the demand, there is not too much of a challenge. The demand still continues, and I think by the end of the year, lithium will also make up. We'll have the same volumes or slightly better.
Okay, and just to clarify, the Neogen Ionics business is included within inorganic itself, right? The 5 crores odd.
That's right, yes.
Okay, thank you. The other one was just, the thought process behind this NCD issuance. So, what exactly is the purpose we are looking for here? Is it working capital or something else, right? Yeah.
So basically, we still have around 250 crores odd amount, which is to be received from the insurance. And there can be sometimes, mismatch in the timings versus we want to ensure that our capex, plans and everything doesn't get affected. So I think there was a small interest delta. So we thought that is worth having, but ensuring that there's a smoothness capex happening. And we are not fully dependent on the insurance money. So overall, once we receive all the insurance money as well as, this debt considering, I mean, this is basically some additional liquidity that we want to have in the system so that, we have so many capexes which are ongoing so that there is no delay or anywhere because of, cash flow related funds. So it's just basically liquidity to keep in the system. Any mismatch in insurance receipt or any other funds which we need to be used with so many capexes which are ongoing. Overall, there is no additional need per se. It's just that just to keep the liquidity and just to keep the flexibility and reduce the dependence in case there's a timing mismatch with the insurance.
Got it. So, by when do we expect to close this? That was one, the NCD issuance, the timeline for this. And number two, then, once this is done, we have basically all our lines of financing tied up. So for whatever CapEx we plan, plus working capital requirements, is everything in place now with this?
Everything is already in place. Like this is only additional, just in case insurance timing mismatch. And yes, this also is likely to happen in the current month, sorry, within August, before August 10. Again, we have received confirmations from investors who want to participate in that. There's even requests for more, but we are capping it at the 200 crore limit, which we have kept. And and all the other working capital, capex for phase 1, phase 2, everything is already there.
Got it. Thank you. And just on the capex at Pakhajan, out of 1,500, I guess 500 odd is done so far. The amount spent in 1Q was only about 36 crores. So is that the normal phasing? Do you expect the capex to pick up significantly in the next 2-3 quarters to meet your deadline of March 26 for commissioning?
Yes. So there are two things. This module plant, once it shifts, so that's going to be one big expense. So once we complete the FAT and post FAT, we have given some modifications. So as they complete and ship that, so that's going to be one large capex item which is going to add significant chunk. The second point is that, for our salt, as our JV discussions are progressing well. Our JV partner also made an official announcement in Japan, with the intention of forming the JV. Our discussions have progressed well. We are mostly aligned the technology, and like some of the only finer points are now getting aligned. So we expect that to happen in 2-3 months. So what has happened is the equipment which we were, the long lead time equipments are already ordered by my JV partner in Japan. And I mean, they've already ordered from their existing suppliers. They are kept ready. So as soon as we conclude the JV, a large chunk of equipment will be ordered from there. So more or less, we are on track to complete by March. Electrolyte is 100% sure. On the salt side, we are just reviewing. Once we have the final alignment, we will know. It will be just couple of months here or there. Depends on how the exact alignment happens, and we have clarity after alignment. But overall, capex will happen more or less in time. Maybe some slight change on the salt side we are watching. Once we have the final JV alignment, we'll be able to give you the right picture on that.
And that was actually my next question on the JV. Any further details that you might be able to share in terms of the stakes of the two partners or the total capex amount and the split between the two of you, something like that?
So I would request to share this once the JV agreement. I know the numbers and we have agreed on that, but I think we would wait for the JV agreement to get concluded, and after that we will do.
Okay, got it. Just one final thing from my side. While these auto battery capacities are still awaited in the Indian market, in the meantime, there seems to be quite a significant amount of development around energy storage, around solar, etc. So, how sizable could that opportunity be? How are you seeing things unfolding on that front?
No, so, this was something which, in the past also we had alluded that, energy storage can surprise us. And what we are seeing is, and I think you can also track that more and more people are requesting almost now all new solar projects which are coming. They are coming with a energy storage kind of capacity which has to come online. What I have seen is, the percentage. So if you are setting up like 100, 1 giga kind of a facility or 500 megawatt kind of a facility, I've seen like around 25 to 50% of that requested as an energy storage backup, so that you can utilize the maximum of the solar energy which can happen. So I think, if you look at that and if you think of 500 gigawatt hour of solar capacity which India wants to put by 2030, and economically also it's making such a strong sense. This number, in my view, can be like, 30, 40 giga or even higher per year, basis, because we are going to go to the 500 giga by, let's say, 2030, and you can have around 100 to 150 giga kind of like a battery storage requirement over the next 4 to 5 years. So it can be somewhere between 30 to 40 giga kind of just for energy storage over next 3 to 4 years. At present, if I have the last year number, there were around 10 to 12 gigawatt hours of energy storage projects which are already tendered, which will come, let's say, over a 2 year kind of period. So around 5 to 6 giga is like, on an average consumption for energy storage is already there.
Okay. So, sorry, just to clarify, out of the total capacity that we'll have in terms of electrolytes, would you expect a significant portion of it to go towards energy storage? Any rough estimates over there?
So if you just think of, the 6 people who have announced, the 6 people I mentioned earlier, right, who have a giga factory starting till end of the next year. You have Reliance and Vari Energy, which are completely basically from energy storage solar point of view. And both Exide and Amar Raja partly is solar and partly is for auto. So you can say at least 40-50% of the capacity in terms of the number of people who are coming online is actually for energy storage. And if you actually put their giga capacities and divide, maybe 50% or even more is for giga storage. Energy storage, sorry.
Great. Thank you. Thank you so much, Dr. Harin. All the best. I'll come back in the queue for more.
Thank you.
Thank you. The next question is from the line of Karthik Srinivas from Unifi Mutual Fund. Please go ahead.
Hi, sir. Good morning. Thanks for the opportunity. I just had 2 questions. One is on achieving the revenue run rate of about 300 crores, which we have guided the market in terms of Neogen Ionics. So we have done we are currently running at about 5 crores for this quarter. So is this going to be a quick ramp up over the next 3 quarters to achieve the 300 crores run rate?
Yes. So we had, guided earlier also that majority of this will come in the second half of the year. That remains still true. I mean, in the second quarter, it's not going to be like 100 crore kind of number, but third and fourth quarters will be very strong. It again depends on 2 points, how fast the electrolyte companies come up, and the cell production comes up, which will drive the electrolyte demand. And the second is how fast, once we approve, how fast the international customers will ramp up the electrolyte salt and additive purchase. So again, both of these based on whatever customer guidance is in the second half. So we are expecting this to largely come in the second half.
Got it. So for this 300 crores, we have the orders tied up, right? So on a steady state basis, how much will be exports now, given that the BESS demand is picking up even in India and a lot of battery manufacturers are coming up and inquiries are lining. So how will be the split of exports and domestic on a steady state basis?
So Karthik, actually, if you think of the capacity which we are ultimately setting up, which is 30 KTA of electrolyte and 5.5 KTA of the salt. What we believe is in the beginning around 4, out of the 5.5, around 3.5 to 4 KTA will be for the international market, and then the balance will be for our local consumption, and then for our internal consumption. And then as we basically ramp up the capacity of the electrolyte, we will have to most likely add more capacity for the salt. So it will depend on how that happens. But in the beginning, it will be more export heavy. Let's say if we're talking of next financial year, but then as we go, maybe they will balance out. And this also depends on, how international market, how strong policies will be put for non-China policies, because everybody wants to have Neogen as a backup. Even if there is so some of the customers I had recently interaction with, they said, okay, even if there is no incentive, they can't depend only on China because of what they did in anode and rare earth. So they definitely want to have a backup supplier. But will we be the backup supplier or will we be the main supplier? Also depends on all the policy frameworks which are getting set up across geographies. So I think it's a little bit early to say, okay, 3 years down the line, 5 years down the line, but in the current year and in the next year, exports will be the main drivers. And once India picks up electrolyte, so we are talking of, let's say, 2027, 2028, whether Indian electrolyte will be more or salt will be more will depend on, like, how much market share we get in India for the electrolyte and, how the international view is about non-China suppliers.
Got it. And who will be our competitor in India for the same electrolyte and this one, salts capacity?
So till now, I think Gujarat Fluoro is one of the companies which has announced electrolyte capacities, but we don't have the exact clear volumes on that. And also for electrolyte salt, they have announced capacities and intention to increase capacities in the future. This is in India, but basically, when you are thinking of electrolyte salts, you are thinking of a global market. So if you look at a non-China global market, you have one company which has started in Japan, one company in Korea, and after that, Neogen and GFL are number 3, number 4. So there are only 4 people at present outside China who can, give you electrolyte salts and additives the way we are giving.
Yeah. So at a world level, what will be the total capacity as it stands today? And we are up to about 5.5 KTA after 2 years, say. And what will be the global capacity today and by FY28, say? What will be how will it ramp up?
So, today the world capacity is somewhere between 50 KTA to 100 KTA of the salt, and we are 5.5, so we'll be somewhere between 2.5 to 5%, around 5 to 10%, depending on that, depending on the consumption. And I think if you go to our investor presentations, we have given some numbers already for 2030 for the international expected demand, assuming 3,000 gigawatt hour kind of battery battery requirement by the time. The main point is, out of this, so if you look at non-China demand, the total non-China demand, capacity which is available today is around 7-8 KTA. So, what we are adding is significant of that because today 90-95% of the capacity is 90-95% of the capacity is basically China.
Got it. And my last question is on the tariffs. Given that the new tariffs have been announced, so is there any impact for you, or it's just status quo?
As I explained, in one of my earlier questions, Karthik ji, that what we have seen is that with the tariff coming in now, there is more clarity. And while there is lesser, the IRA for the battery EV manufacturers, there is is curtailed. But the clarity on the battery and the requirement of non-China has given clarity. So again, customers who are sitting on the fence are now, are now even more keen. And with what happened in rare earths and to some extent anode and China's message that they want to restrict even LFP technology, people are even now more worried to depend on China because most of the EV makers, non-China EV makers, China is the biggest competition for them. And they are all worried if they will influence and not allow them to get either key materials or key technology. So we have seen international customers being more keen to have a China-free supply chain now as compared to even earlier.
Got it, sir. So that's it from our side. Thank you so much and wish you all the best.
Thank you.
Thank you. The next question is from the line of Jason Sons from ITBI Capital. Please go ahead.
Yeah, sir. Thanks for taking my question. So first question, just wanted to know, in terms of the base business, for both bromine and lithium side of the business, are you seeing some pickup in let's say, our verticals like pharma, agrochem, what is the pickup you are seeing, if any? And in light of that, and I know the fire incident that has impacted the H plant and all that. So the standalone guidance, is that maintained, what you've released on March 7, or is there some change to it? Just wanted to see some more color on the sub-segments within the base business.
Yes, Jason. So
Yes.
I think for the pharma, we are seeing a very strong pickup. We are also seeing good new inquiries coming from, semiconductor, flavor, fragrance, and other industries as well. Agro has improved, but again, still not at its full. And especially agro, we had international business, and with the Dahej plant getting affected, this year for us, agro again will not be able to contribute so much because some of the international customers we had to supply from Dahej. Although one positive point is that in our CSM business, we have received some quite good large inquiries on the agro side for, let's say, 2026, 27, 28 kind of launch. So the pipeline for the agro remains good. So as the markets recover, we are there to basically capture the demand from the customers, and almost most of the customers appreciated the speed at which Neogen communicated the fire incident, the speed at which we are rebuilding the plant and we are bringing them online, and some of the improvements we are making there. So all these were taken very positively by the customers. So to answer your question, pharma is looking good and getting better. Other industries are also looking good and getting better. So the interest, again, that China plus one kind of a mentality is again a little bit getting more active in these industries as well. And agro, the demand is slowly improving, not great jump, but it's doing better. We've seen also good interest on our organolithium piece. So we have now started making more inroads once we have the capacity visibility in the international markets. So I think that is also something which we are hoping will help us. With all of that, look, we are on track to achieve what we had targeted. So around 825 to 875 crore on the base business. We as you know, we had to change some of the strategies to take care of the impact on the Dahej side. So our Q1 performance was little bit affected by while we are transitioning to alternate strategies and shifting molecules around. But I think we'll see even further. And in spite of that, we were able to do last year performance when the Dahej plant was still there. And as we get into Q2, Q3, Q4, we should see better performance as compared to what we did in Q1. And so that's why our guidance remains the same. On the inorganic lithium side, as I explained earlier, that we want on the inorganic lithium side also that the demand this quarter was a bit less, but I think by the end of the year we would have caught up or we would have been slightly higher. So that's I think covers all the segments.
Okay, sure, sir. And so just I understand that an earlier participant did ask this, but for battery chemicals, you are seeing a good ramp up. I know you had said 100 crores for 26. That could have some change, but we have good visibility in the second half. Of course, it depends on the cell capacities coming up and the lithium salts pick up as well. But we have still decent visibility for that in the second half.
Yeah,
right?
Yes, there is. And if I see right, I mean, for example, I sold more electrolyte in one quarter than I sold in the whole of last year. So I think that's a positive sign, right?
Right.
And even in last July, August, I think even this quarter would be similar or slightly better. So I think we are seeing ramp up, but I have to say, with the way the industry is transitioning and, we are being one of the earliest battery material, I think maybe one of the only battery material producer who's ready with giga facility already. So I request, all of you to have a little bit of patience. I think what we really should be looking at, because we are the pioneers or the beginners here. So we have to mainly look at, what is the scenario in 2027, 2028, right? When we said we are going to have the full utilization levels. And if you look at 27 and 28, whatever has happened in China, the rare earths and the anode, people are more interested, more keen to basically buy from India. So, that makes our long-term business more strong, as well as our JV also has been very, very strongly appreciated by the customers because they get the comfort that, Japanese technology in India, from whom they are buying for 30 years, is like that we are the only combination who can give that. And similarly, on the electrolyte side also, with whatever is happening in energy storage, the concern about India having enough demand is going, because whatever EVs, two-wheelers, three-wheelers, four-wheelers can be a little bit slower, but you will have a bigger demand also coming from energy storage part. Also, companies like Suzuki have been announced that, okay, they would also be now setting up a battery plant maybe a little bit later, 2028, 29. So once the mainstream companies also start joining into battery and cell production, I think all these are positive signs for good demand in 27, 28, both on electrolyte side as well as salt side. So I think this is going to be little. So we will have to really keep our eyes focused on 27, 28. Try to do best in 25, 26. But I think if I look at 27, 28, we are in a very good shape.
Okay. Sure, sir. Thanks for that detailed answer. So, just also, I missed, you had mentioned in response to an earlier participant, I think you mentioned 2 subsidy acts in the US. So, again, there's a lot of, uncertainty on the tariff thing and the IRA's, impact getting reduced and the one big beautiful bill and all these things. So, sir, how are you seeing in the US? Because of course there's a kind of a China plus one is on the up move. That bodes very well for us. So what are these acts, just and some color on how the US is approaching it? I mean, amid all the, the confusion there.
Yeah. So, basically IRA and the big beautiful bill, right? I mean, both of that basically were focused on one very clear message, which is basically not to depend on China, right? So even the parts which relate to the battery material, what I called as like 45x credits, right? So even those are basically linked to having some non-dependence on China and localization. So that's the positive message. I think, tariff, there is no point to guess now. We have to see when the dust settles, right? What is the final? And the only thing which matters is because sometimes you see some very critical things, they just completely exempt. So they can even say that, all battery material is exempt from the tariff, like they did for iPhone and sometimes for pharma. So we'll have to see what is exempted from the tariff and what is not. And then what is the relative position between India, China, and Japan and Korea? Because this is the only 4 places you can make. Also, Japan and Korea, I think largely in that also what will be more important is the India and China. Because Japan and Korea, even if they want to set up a large capacity, they take very long time because of permission. So mostly we have to see where the dust settles between India and China and whether, they are exempt or not. But for us, what is more important is that when they are giving some billions of dollars of subsidies to the cell makers in US, that is linked to not having supply security from China. So supply chain coming from China and having a non-Chinese supply chain. So I think that is the positive message. What is the government's intention? And then, we'll keep watching there. But as I told you, that will only make a difference whether we are a backup supplier with, 20-25% of the market, or we are the majority supplier with 30, 40, 50% kind of market. That's the only difference, these policies will have between the way the policy decision happens. But I think whatever we are currently aiming, we should not have to worry for that. It's just beyond that, how fast we will grow will be clear once the dust settles on the policies.
Sure, sir. And just some quick confirmations, clarification.
There are 3 more participants waiting, and we have today limited time because one of the customers is actually visiting us today, so we'll not be able to extend the call too much long. Yeah.
Sure. Okay.
Thank you, Jason.
Thank you. The next question is from the line of Arun Prasad from Avendus Spark. Please go ahead.
Good morning, everyone, and thanks for the opportunity. Dr. Harin, you mentioned in detail about how customers do not want to depend on Chinese for a long period of time. Is there any contractually they are locked till certain months or period or year because of which they can't buy anywhere outside from China? Any of the potential customers that are visiting you, as far as you know?
No, I don't think that is basically a concern.
Okay, because despite so much, clearly it seems that they are 100% dependent on Chinese, and we are there as an alternative. But still, the progress in product approvals or a plant visit seems to be in a slightly slower pace. One would assume that given this kind of a high dependence and important to diversify supply chain, they would be doing it in a war-like scenario. But on the ground, it seems to be moving slow. So what explains this kind of a dichotomy?
So the visits are happening, the discussions are happening, but like we discussed, right? Last 2-3 months, there's a lot of variability which is happening on the daily basis. So they are just trying to get a hang of that. And I think the only other thing is that the real deadline for them is that in 2026. So 25 is more like a comfort year for them. That okay, if I start buying in 25, then I'm more comfortable. 26 is the year where they want to basically start shifting, and for the subsidy and all that, 27 is the year where they just cannot buy. So as we get towards the end of 25, 26, so they keep having some breathing room. And at present, with all the things which are happening with tariffs, they have to take care of what is happening today and juggle with that versus preparing for 27. So I think that's the dichotomy.
Okay, understood. Just for clarity, the plant visit will happen usually after the sample from commercial plant is received, tested, approved, and then only the plant visit happens, or it happens after the plant visit. This will start. How should we look at this process now?
So each customer has their own strategy. So some of them have taken the samples and then they will come. Some of them will say, no, first I will come, I'll approve only, then I'll spend time in testing the samples. So it depends on them.
Oh, okay, understood. And you also talked about the backup versus being a main supplier or a backup supplier. Typically, what is the volume share given to, say, a backup supplier? What is your assumption when you assume that you will be a backup supplier, becoming a main supplier?
So, so one of the customers I discussed with that, hey, if there was no tariff, what would you do? So that particular customer said, hey, I would be still 50% non-China. And I said, how many suppliers would you have in non-China? Because I would have at least 2. So that's basically how I would basically come with that number of at least having 20-30%. Broadly, also I have seen that customers don't like to have more than 2 or 3 sources because they want. So I think the maximum, they'll have a 3 supplier approved, 2 or 3. So depends on, I would say backup would be somewhere on a lower side 10-15%, on the higher side around 25-30%.
Understood. My second question is on the Morita JV. You mentioned that you are yet to get aligned with the JV partner. In what kind of a topics that there is still say a misalignment? Is it a financial in nature or operational or strategic or a more like a product portfolio? How should we look at this non-alignment at this point of time?
Just basically, I would say a lot of it is just the lawyer stuff, legal stuff. On the language of the agreement, and they are very strong Japanese companies. So Japanese legal way and India's legal way, kind of trying to understand that. So that's, I think, mostly that. And little bit what we are doing is, because they have not given us the exact final, drawings and exact, because the JV is still to happen, right? Exact detail SOPs. So as we understand that, we know the big changes we had to do, we have done. The finer changes that we need to do in our design to basically crystallize on the final dates, etc. Those are the things which are happening in parallel. So once the JV agreement progresses, in parallel, we have more and more information that, okay, which segment India technology is better or our Indian equipment is better, which is the Chinese equipment or their technology is better, and then we are taking the better of the two. In some cases, we are even thinking of a third option together that, hey, why not this better? So I think those kind of things are currently happening.
Understood. One last bookkeeping question, Dr. Harin. On our fire incident, we have claimed the insurance and got insurance claim for that. But what is our internal estimate for the loss of profit because of this incident?
So, it's very difficult because the loss of profit is going to be for a period from April to March, right? So for the whole year. And basically the loss on profit, the process starts after you reinstate the plant. So the process of giving you loss on profit will be only after that. So if we had a very good number, we would have put it in our estimate.
Okay.
But that's something, it's ongoing. So as a company, we are very trying our to maximum operations not affected. But the loss on profit will basically take into account some of the fixed overheads which you would still have. What is the business which we could have done, which didn't happen, and also, some additional expenses we had to do when we shifted the productions around. So I think it's going to be a little bit complicated. So we will wait for, the experts to do that after it. Especially being insurance, I don't want to hazard a guess right now.
So right. So the timeline is basically the next financial year only we'll come to know about this.
Yes. Loss on profit will be. If we have a clarity subject to accounting rules in this year, if we can take a provision, we'll take a provision. But at present, I don't have any number which I can share.
Understood. Thank you very much and all the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Archit Joshi from Nuvama. Please go ahead.
Hi, good morning, sir. Thanks for the opportunity. In the interest of time, I have 2 questions. We'll bunch it up together. So first, you earlier mentioned that the capex on the JV with Morita that is still undisclosed. With respect to the current agreement that you have with them, beyond 1,500 crores of the announced capex, there will be incremental capex coming in Morita, or 1,500 is accounted for?
So basically, as you know, the existing capex that we have included both the salt and electrolyte, and we are not planning unless we see right now some many additional capacity. So the only thing is that for the same capacity, when we completely align with their technology, is there something less? Is there something more? So we would get to know that. So that's the only thing pending. So it's basically 1,500 crore. If there is any delta created because of the JV, that we will know once we have the full alignment.
Got it. So secondly, on